Talking next is very important subject, which is auto ancillaries. Yes, there were many things in the last 10 years like slowdown, demon, GST implementation, COVID, which led to slower economic growth and therefore slower passenger vehicle or two-wheeler growth, as well as shared mobility, EV disruptions leading to lower growth than expectations. But one sector which continued to do well has been auto ancillary sector. Auto ancillary companies have transformed itself from IC to EV very well. The kit value or the content per vehicle has seen more than 1.5 times increase in the last 5 years. Also, the export potential of auto ancillary companies has grown tremendously. If you look at the growth rate in the last 10 years, the auto ancillaries have seen 10% plus revenue growth in CAGR, but if you look at exports, they have grown more than 12% on a CAGR basis. Auto ancillaries growth generally goes hand to hand with OEM companies' productions, but the recent phenomenon of premiumization, electrification has led to disproportionate growth for auto ancillary companies, especially with increased kit values and content values in the cars and two-wheelers. We've seen very high growth for certain number of companies in auto ancillary space. Over the last 10 years, we've seen many auto ancillary companies growing their top line as well as bottom line in high teens and therefore seeing multifold jump in their market capitalization. We believe export opportunity and EV adoption will continue to see a strong growth potential for auto ancillary companies. More interestingly, valuation expansion probability in auto ancillary companies remains very high. The potential to grow faster than auto OEMs because of export theme and EV adoption will continue to drive further re-rating and higher growth in auto ancillary sector.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.